Dark clouds are hovering over the world's financial markets. Monday was not just any mundane first trading day of the week, but a potential Black Monday. Trump's tariffs are the talk of the world now, and the related developments are battering the stock markets across the world and spooking investors. But do you know the story of the actual Black Monday that shook the global markets? What led to that dark day? Let us dive into the backstory behind the Black Monday. Let's go back a few years, 1987. It was October 19th, a Monday. A chain reaction of market distress sent a shockwave across global market exchanges. The stocks nosedived in a matter of hours and the markets across the world crashed. The US Dow Jones Industrial Average plummeted 22.6% in a single trading session, the largest one-day stock market decline ever in history. The S&P 500 saw an even steeper decline on the same day, a whopping 30%. And just like that, the first contemporary global financial crisis unfolded, the sharpest market downturn since the Great Depression. This was the infamous Black Monday. But what caused it? You see, the stock market was growing healthily in the first half of 1987. Dow Jones even gained 44% in 7 months. However, the federal government made a disclosure that the US trade deficit was larger than expected. As a result, the dollar fell in value and markets began to record losses. On October 16, 1987, Friday, an event called Triple Witching happened. That is, monthly expirations of options and futures contracts occurred on the same day. And this coincided with the rolling sell-offs. In short, by the end of the day, Dow Jones had lost 4.6%. And on Saturday, October 17, 1987, Treasury Secretary James Baker publicly threatened to devalue the US dollar to reduce the widening trade deficit. And even before the US markets opened the following Monday, the stock markets in and around Asia began dropping. New Zealand's stock market fell 60%, and traders were racing to sell. Thomas Thrall, a senior professional at the Federal Reserve Bank of Chicago, who was a trader at the Chicago Mercantile Exchange at that time, said it felt really scary. There were a few explanations for the crash. One was securities exchanges had been powerless to intervene in the large volume selling and rapid market declines. Thus, after this Black Monday, regulators came up with some solutions, rather precautions. Trade clearing protocols, new rules, circuit breakers, etc. came into place. Since that day, if the S&P 500 stock index declines 7%, 13% and 20%, the stock exchange will halt trading temporarily. Now that you know about Black Monday, what are your thoughts on the current uncertainty and the volatility in the markets? Do let us know in the comment section below and stay tuned for more.